Hi everyone, very good evening and welcome back to the session. So we will be continuing with the sessions of AAA revision. And in the last day session, we were going through the parts of 50 marks area. And today we will be primarily focusing on the 25 marks area. And we will be quickly rushing through all the topics of the 25 marks area. So basically, yesterday we have covered the topics in relation to 50 marks, which includes the areas of audit risk. Which includes the areas of audit risk, then the risk of material misstatements, then the business risk, then the audit risk or risk of material misstatements with that of analytical procedures. And finally, we have also discussed about the areas of additional information. Then we have discussed about the areas of substantive procedures or the key audit procedures. Substantive or audit procedures. And in addition to which, finally, we have also discussed about the ethics part as well. So these were the total set of points that we have covered till the date. And these will be the area that will be tested as part of your 50 marks area. And at the same time, these areas can also be tested as part of your 25 marks also. Mainly the areas of audit procedures and the ethics will be covered in the 25 marks area as well. So ethics will be a part which is common in all the areas, which includes both the 25 as well as the 50 mark area. But when it comes to the audit procedures, basically the audit procedures will only be asked as part of 50 marks. However, procedures that need to be performed by the auditor in relation to the prospective financial information, then in addition to which there can be procedures in relation to the forensic audit, in relation to the due diligence, and the procedures in addition to which basically there will also be questions for KPIs as well, key performance indicators as well. And all those will be tested as part of the 25 marks area. So we'll just do one thing. We will now look at the total syllabus or the total area of questions that will be coming from the paper AAA. And as you can see over here, there are some topics which we have already covered. And in addition to which, there are also still some topics that we haven't covered yet. So the audit risk part, as we already mentioned, it's covered. Risk of material misstatements, it's done. Risk of material misstatements with analytical procedures are also done. And when it comes to the part B, here the ethics part, the ethics part is also done. So these all are the other areas about which we need to have a clear understanding to score marks in the paper AAA. So now let's start with the area of the matters to be considered and further action. So basically, before going through this area, the matters to be considered and further action area, the first thing that we need to quickly revise is the area of audit risk. So what was the reporting format of audit risk questions? How do we need to provide the answers of the audit risk? First of all, we need to include the materiality. And after writing the materiality, we need to include about the accounting treatment in relation to the audit risk. Then third, we need to mention about first of all, about the materiality, then about the accounting treatment. Then we need to mention about the risk, and finally about the impact on financial statements. So the same pattern will be followed in the 25 marks question as well. So let's just do one thing. Let's look at a question. And now let's start with a question called Rocket. There's a question called Rocket in your revision kit. Rocket Company. So we will be using this Rocket Company's question to learn about all the reporting formats resulted here. We will be looking at the matters to be concerned further action, matters to be concerned discussion with the management, matters to be concerned audit evidence part, matters to be concerned further action, and finally matters to be considered before accepting an engagement and terms of the audit engagement will also be considered. And for all these questions, so for the first 4 types of requirement, we will be using the same question again. Okay, so please do one thing. Please read this question. And after that, let's start with the way in which we need to present the answer to this. Please go through the question. So it's question number 24, Rocket Company in the Kaplan revision kit. It's in page number 75. So please start reading the question, Rocket Company. Just the requirement part B is enough. So please go through this requirement. All right. So have we gone to the question? Fine. So now let's read it together. So you are the manager of T and Company, a firm of chartered certified accountants, and you currently involved in the completion stage of the 2 engagements relating to different clients. Both engagements have raised issues that require your attention. Rocket Company is a listed company operating in the engineering industry. The company manufactures mission for the use in aircraft, defense, and marine sectors. The audit for the year ended 30th September 2017 is almost complete. The revenue and profit before tax figures recognized in the draft statements are 1,437 million and 139 million respectively. Audit procedures identified 2 sales transactions in the final quarter of the year that relate to 2 different customers, but where the goods were delivered to same location. Further, the investigation revealed the goods were delivered to a third party who agreed to store them until the customers were ready to receive the delivery. The goods have not yet been delivered to the customers because they are both building new facilities and neither is sufficiently progressed to receive new machinery. The contract terms explicitly states that the Rocket Company is obliged to deliver goods to the customers for final inspection, and acceptance of the client has not agreed any consequent amendments to these terms. The sales invoice were raised and revenue recognized upon dispatch of the goods to the storage facility. During discussion with the audit team, the finance director stated that the company has fulfilled its contractual obligations to provide goods by a specified date. The revenue attributed to 2 sales transactions total 17 million. So what they are talking about in this question? So well, it's a standard IFRS 15 that's being affected here. So what they actually talk about here? So there's a customer and the company have agreed to the customer that they will deliver the goods to the customer's warehouse. And it is also explicitly stated that once the goods are delivered, these goods need to be examined by the customer. Then only it will be considered as the completion of the performance obligation. But it's clearly mentioned that the goods are not yet delivered to the customer because they have delivered it to a third-party warehouse. In addition to this, these goods are also not being reviewed by the customer. So what will be the issue here in such a case? What will be the issue?
Revenue is recognized in advance.
Exactly. They have recognized the revenue in advance. That is what it's happened here. So is it allowed to do so? Can we recognize the revenue when the performance obligation is not satisfied?
No, sir.
As per IFRS 15, what we have learned, the revenue should be recognized only when the performance obligations are satisfied. All right. So we understood the case from the scenario. So the first thing that you need to do is to represent this same case within the answer. But while incorporating your answer, the first thing that you have to do is to calculate the materiality. Well, we have got a figure here. So total amount of misstatement would be 17 million because they have received 17 million in relation to the 2 sales transactions and they have included 17 million as part of their revenue. So we need to calculate the materiality of the 17 million. So first of all, you calculate that. And then you have to talk about the accounting treatment in relation to IFRS 15. And you have to talk about the risk that will arise here. And finally, what will be the impact that is being occurred here. So let's take a sample answer. We will be writing the answer like this. I consider that the amount of 17 million is both material on the basis of maybe profit and revenue. Consider like that. And let's start with the answer. So we'll be writing like this. The company has recognized a revenue of 17 million in relation to the 2 sales transactions, which represents how many percentage? Maybe 5% of the profit and 7% of the total asset. Therefore, it needs to be considered as material. As per IFRS 15, revenue from contracts with customers, revenue should be recognized only when the performance obligation is being satisfied. Until the date, revenue should be recognized as a deferred income. However, the company have already recognized the revenue of 17 million, stating that they have completed the performance obligation, but these products are not provided to the customer's warehouse and these goods are not being inspected by the customer, which were stated explicitly in the contract. Therefore, it cannot be treated as a completion of the performance obligation. So the risk is that the company's revenue might be recognized in total rather than recognizing it as a deferred income. And the impact is that the revenue is overstated and the deferred income is understated. This is what you need to give us the answer. So you have got two requirements here. The first requirement was to comment upon the matters described above. And this is how we will be commenting on the matters described above. So we have just given a comment, so which is equivalent to the way in which we write the audit risk. But the things that you have to include will be purely based on accounting treatment here. You won't be having any kind of general risk as we consider in the 50 marks area. Here, all risk will be specifically in relation to the accounting standards. So when you get a question to comment on the above situations, you can be able to comment like this. And there is also another requirement. Explain the further actions that need to be taken by the auditor before the auditor's report are signed. So we need to mention about all the ways in which we need to comment on this situation, and we need to provide the further actions that need to be taken by the auditor in this case. So what should be the action that need to be taken by the auditor? Basically, the actions will be always the same. What can be the answer? Action?
Qualified except for opinion should be issued.
Yeah, we need to provide a qualified opinion, fine. But before moving on to the qualified opinion part, we need to take some certain actions. Well, we have just figured out the misstatement, and directly we cannot provide an opinion, right?
Discuss with those charged governance.
Exactly, you will be able to discuss with those charged with governance, but still there is something before that. First thing is that we need to discuss with
the management. Discuss with management.
Exactly, we need to discuss with the management. We need to discuss with the management in the first phase. Then second, what we should do, we need to discuss with those charged with governance. So we need to discuss with those charged with governance to correct the misstatement if the management is not willing to. And there can be chances that those charged with governance also sometimes might not be willing to correct a misstatement. In that case, we should communicate this, we should mention to those charged with governance about the impact that we will create over auditor's report. So we need to mention about the impact that will create over the auditor's report to those charged with governance. And again, if they are unwilling to correct the misstatement, we should try to obtain a written representation from them. We should obtain written representation from them stating about their intention to continue without amending the financial statements. And finally, we need to reflect it over the auditor's report. Finally, we must also reflect it over auditor's report. This is all that we need to do in relation to the further action. So while giving your answer, you should not write it in a point wise. You have to give a proper description about the thing. And these are the key points that need to be kept in mind. So I will explain to you about the way in which you need to present the answer. So you'll be explaining the answer like this. Give a heading, further action, and talk like this. The auditor should discuss the matter with the management, and the auditor should request them to understate. So the auditor should request them to correct the mistakes in financial statements by removing the amount of 17 million from the sales, and the same amount of 17 million should be requested to be included as part of the deferred income. However, if the management is unwilling to correct the misstatement, the auditor should discuss this matter with those charged with governance. But if those charged with governance is also not taking corrective action, then the auditor should show the impact over the auditor's report. The auditor should inform those charged with governance about the impact that they will show over the auditor's report. However, still in case if they are unwilling to correct, then the auditor should obtain written representation from those charged with governance, stating their intention to continue without amending the financial statements. Finally, the auditor should also reflect the impact over the auditor's report. This is all that we detail about the other further actions. So this is the total further action that need to be taken by the auditor in relation to the identified misstatements. Okay. Is it clear, guys? So first of all, you need to discuss these things with management. You have to discuss this with those charged with governance. Then you need to obtain written representation and you need to reflect it over the auditor's report. So this will be the way in which you will be providing further actions during the course of your exam. Clear? Is it clear, guys? Okay.
Yes, sir.
So this was the first two parts. So the examiner has requested us to comment on the matters described above. So we will be commenting it in the same manner in which we have given the auditor's risk part. Then next, we need to explain the further actions before the auditor's report can be signed. And this is the way in which we will be giving the further actions. First of all, we will be discussing these matters with the management. Then we will be discussing these matters with those charged with governance to show the impact that will create over the auditor's report. We will be providing written representations. And finally, then we will also reflect it in the auditor's report if they are not willing to correct the misstatements. All right. So this was the first two parts of the question. And in addition to this, we were also having additional parts here. And here the question has requested us to give the impact over the implication of auditor's report if no adjustment are made to the financial statements. So consider like this, we have stated all these misstatements to the management and still they are unwilling to correct. And in that situation, what will be the impact that will be created over the auditor's report if no adjustment made in the financial statements? So we need to talk about that, the impact over the auditor's report. Well, we will just do one thing. We will discuss about the types of opinion before moving more into the session. So what are the types of opinion that we usually use to provide on the financial statements? Either we are providing a modified opinion or unmodified opinion. And basically we know that the modified opinion will be further classified into three types, which were the qualified opinion, adverse opinion,
Disclaimer of.
okay. Then the unqualified opinion or the unmodified opinion will be further be classified as unqualified. So what I mean by a modified opinion, the financial statements may contain mistakes. Means in that case, we provide a modified opinion. So what is qualified in that qualified opinion? The financial statement shows a true and fair view, but it is subject to some reservations, or it's an exceptive opinion. Except if something is avoided, the financial statement shows a true and fair view. That is something called a qualified opinion. So what do you mean by adverse opinion? Adverse opinion.
Does not show a true and fair view.
Yeah, the financial statement does not show a true and fair view. When the financial statements doesn't show a true and fair view, we will provide an adverse opinion. And what do you mean by disclaimer of opinion? What do you mean by disclaimer of opinion?
Due to lack of evidence.
Unable to form an opinion on the financial statements. Why? Because of the lack of audit evidence. Because of the lack of audit evidence, auditor is unable to obtain sufficient appropriate audit evidence. That is something called disclaimer of opinion. And finally, unmodified opinion will be unqualified, which means that the financial statement shows a true and fair view. So these all are the types of opinion that will be provided during the course of an audit. So let me ask you, when there is a misstatement in the financial statements, which is material and pervasive, what will be the opinion provided by the auditor? When there is a mistake in the financial statements, which is material and pervasive, what will be the opinion? It's an adverse opinion, right? It's an adverse opinion. When there is a mistake in the financial statements, which is not material and not pervasive, what will be the opinion? Unqualified. Yeah. Then when there is a mistake in the financial statements, which is material but not pervasive, qualified opinion. Okay, so always keep it in mind. If it is a misstatement that is material and pervasive, we will be providing an adverse opinion. If it's a mistake that it is material but not pervasive, we will be providing a qualified opinion. Then if it is a mistake that is not material and not pervasive, then we will be providing an unmodified or unqualified opinion. Then if it is a lack of audit evidence, which is material and pervasive, then what will be the opinion? It's a lack of audit evidence, which is material and pervasive. What will be the opinion?
Disclaimer of opinion.
Disclaimer of opinion. It's a lack of audit evidence, which is material but not pervasive.
Qualified except for.
Okay. It's a qualified opinion. Then if it's a lack of audit evidence, which is not material and not pervasive, then what will be the opinion? Not material and not pervasive. It's a lack of audit evidence.
Unqualified.
Unqualified opinion. Okay. So consider it as a summary. Even if it's a misstatement or a lack of audit evidence, if the case shows that it is material and pervasive, sorry, it's material and not pervasive, always it will be qualified opinion. Even if it is a lack of audit evidence or misstatement, if it is not material and not pervasive, it will be a unqualified opinion. The only case that makes it different is the case of which case? Both material and pervasive. In that case, if it's a misstatement, which is both material and pervasive, we will be providing an adverse opinion. If it's a lack of audit evidence, which is both material and pervasive, we will be providing a disclaimer of opinion. And that makes a difference. And we know about the way in which we need to calculate the materiality. However, how do we calculate the pervasiveness? How do we calculate the pervasiveness? Pervasiveness, how do we calculate it? We need to calculate whether a misstatement is material and pervasive, right? So we know the calculation of materiality. We have learned it multiple times in the last day. And how can we calculate whether a misstatement is pervasive or not? How? Any idea?
It's more than 15%.
It's more than 15%. Okay. Okay, fine. So how do you get that?
We'll find the percentage of whatever the suppose there's some plant and machinery, we'll find with that of total asset. If it comes more than 15%, then it is pervasive. And if it is less than 15%, then it is not pervasive. Means the major part is of the total asset, then it is said to be a pervasive thing. Otherwise, it is said not to be a pervasive.
Okay, fine. So that's a kind of assumptions that is being used, but it's not a major assumption. Basically, the examiner have suggested us with an assumption for calculating the materiality. Well, there are also some standards that give us a perfect insight about the way in which we need to consider the materiality. So as per standards, the materiality is considered in three manners. The first case, if a misstatement affects multiple elements in the financial statement. Say, for example, if a misstatement which affects both the balance of asset as well as the balance of profit will be called as a pervasive amount. So if it's a misstatement that affects the multiple elements in the financial statements, it's a material and pervasive mistake. And if it's a mistake that affects only a single element in the financial statements, and if it affects a substantial portion of that element, that is what you explain. Say, for example, if it affects the assets value, and if it affects the assets value in a significant manner or a subsequent manner, then we will be able to call it as a pervasive misstatement. And third one, if it's a fundamental accounting disclosure, like a going concern disclosure, if it is omitted and misstated, then it can also be considered as pervasive. So the pervasiveness is considered in any of these three manners. Either it's a misstatement that affects the multiple elements of the financial statements, or it's a misstatement that affects a single area, but it will be affecting a substantial portion of that single area. And third, it will be considered as part of a major accounting disclosure. And if that major accounting disclosure is omitted or misstated, it will also be considered as material and pervasive. However, we won't be able to determine the materiality in this respect during the course of your exam. So the examiner has suggested you one thing. You will be able to consider the pervasiveness like this. First of all, consider like this. The company is already having a profit of 5,000 rupees. And the company has forgot to include a particular salary expense. And the salary expense amounts to 6,500. So the company have not included this salary within the financial statements. So we will be able to call it as a misstatement. And consider like this. What if the misstatement was already being adjusted in the financial statements? The profit would be converted into a loss of 1,500, right? Because the company was having a profit of only 5,000 and the salary expense they have forgot to include is 6,500. So if this is included in the financial statements, the loss would come around 1,500. That's a case number one. Case number two, consider like this. The company are already incurred a loss of 2,500 rupees. But unfortunately, the company forgot to include an income of 3,500. So what if the company have already included the income of 3,500 within the financial statements? This would be converted into a profit of 1,000 rupees, right? This would be converted into a profit of 1,000 rupees. Then we will be able to consider these mistakes as a pervasive misstatement. So basically the assumption is like this. Already, if the company has incurred a profit or a loss, and after the adjustment of the misstatements, if this profit or loss is retranslated into profit or losses, then we will be able to call it as a pervasive misstatement. So just consider like this. If the profit is restated into losses after the adjustment of misstatement, it will be pervasive misstatement. If the losses are restated into profit after the adjustment of misstatements, then it can be called as a pervasive misstatement again. So this is the way in which we will be considering the pervasiveness. Okay. Then here the examiner has asked you to consider the consider the impact over the auditor's report if no adjustments are made to the financial statements. So how do we need to show that? First of all, again, you need to give a very small heading called reporting. You have to give a heading called reporting. And in the reporting heading, first of all, you need to again mention about the materiality of the item. You need to mention whether the 17 million is material or not. Then once the materiality is calculated, then the next thing that you need to show is to discuss whether the amount is pervasive or not. And after that, you need to mention about the opinion, which is the opinion that you are going to provide on the financial statements. And finally, you must also mention about the basis of opinion. Basis of opinion. And this basis of opinion should be provided only if the examiner asks you about the impact over the auditor's report, and if the question that you get is on auditor's opinion. If you're getting a question to show the impact over the auditor's opinion, then you should include only points up to opinion. It is not necessary to mention anything regarding basis of opinion. So the basis of opinion should be provided only if you're getting a question on auditor's report. Okay. So you will be providing answers like this. Well, before that, we will just do one thing. We will look at the question again and let's see what it's mentioned in the question. So the 17 million was a misstatement. Let's assume that this misstatement is material. Then what's the amount of profit here? The revenue and the profit for taxes. Yeah, the profit is 139 million. So it is a pervasive misstatement or not? Is this a pervasive misstatement? Is this?
No.
No, because the profit is 139. If you deduct 17 million, which is the misstatement, from 139, what will be the result? Definitely the company will still be in profitable position in having converted the company into losses. Therefore, we'll be considering it as a pervasive. We will be considering it as a mistake that is not pervasive. Then it's a material misstatement, but it is not pervasive. So what should be the opinion that needs to be provided by the auditor here? That material misstatement, but not pervasive. So what should be the opinion?
Qualified.
Yeah, qualified opinion. Qualified opinion should be provided here. And what should be the basis of opinion? We need to provide basis of qualified opinion here. Okay, we need to provide basis of qualified opinion. Why are we including the basis of qualified opinion? To provide the reasons of giving qualified opinion. Okay, so I will show you the way in which you need to present the answer. Consider like this, the same manner. Give a heading for reporting, and right after that, the amount of 17 million represents dash percentage of the profit and dash percentage of the total asset. Therefore, this needs to be considered as a material misstatement if these are not corrected by the company after discussion with the management and those charged with governance. However, we cannot treat this mistake as a pervasive misstatement as it has not restated the reported profit into losses. Therefore, it's a misstatement that is material but not pervasive, and the auditor should provide with a qualified opinion. Thereafter, the auditor should also provide a basis of qualified opinion paragraph following the opinion paragraph to show the reasons of providing qualified opinion and the potential impact of the misstatement in the financial statements. This is how you need to provide answer in the reporting session. So the reporting session's answer will be provided in this manner. First of all, you need to talk about the materiality, then about the pervasiveness, then you should mention about the opinion that you will be giving, and finally, you must also show the purpose of including basis of opinion. Just mention like this, the auditor should provide a basis of opinion paragraph subsequent to the opinion paragraph to give the reasons of giving qualified opinion. That is all you need to show there. So this is a basic question on audit risk and, the audit matters to be considered further actions. So let's do one thing. Let's quickly discuss through the answer and the marking scheme of this question. Yeah. So when you look at the answer here also they have discussed about the materiality in the first phase. Then they have mentioned about the accounting treatment. Then the what went wrong and the impact here. Usual thing. And this is a further action session. See, TN company should request that the client adjust their financial statements to reverse the revenue recognized in relation to goods being stored at the third-party facility. If they refuse to adjust the financial statements, TN company should communicate the misstatements to those charged with governance. They should repeat the request to adjust the financial statements and inform them about the modification that will be made to the auditor's report. If the client refuses to amend the financial statement, TN company should obtain written representation from the client confirming their intention to proceed without amending the financial statements. They are aware of potential requisitions. This is what we stated as the answer as well. See, here, first of all, they are requesting to the client. Client is nothing but the management. Then, if the client is refusing to adjust the misstatement, then they will be communicating that to those charged with governance. If those charged with governance are also not accepting the misstatements, then we should inform them about the modification that will be made over the auditor's report. If that is also not working, then what we need to do finally, we need to obtain written representations from them. This is what we stated here as well. Same thing, right? Same. First of all, discussion with the management, then discussion with those charged with governance, impact that will create over the auditor's report, a written representation, and you should also reflect it in over the auditor's report. And here we are reflecting it over the auditor's report. If the matters if the management refuses to reverse the amount of 17 million of revenue recognized in relation to this transaction, auditor will conclude the financial statements are materially misstated. So we have talked about the materiality here in the first paragraph. Yeah, materiality is discussed here. Then the matter is material to the statement of profit or loss, but it is unlikely to be considered as pervasive. This required adjustment would not lead to a reported profit being restated as losses. And the only caption of the financial statements affected will be revenue and receivables. So we are talking about the pervasiveness here. So we have considered where it is pervasive. See, the required adjustment would not lead to reported profit being restated as loss. That is why we are considering it as not pervasive. Why? Because the profit are not restated into losses. And therefore, we will show that we will be providing qualified opinion here. So it's the opinion paragraph. And finally, the auditor should also include a basis of qualified opinion paragraph below the opinion paragraph. For what purpose? Should describe the quantify the effects of misstatement. In order to show the effects of misstatement, we are providing a basis of opinion paragraph here. So this was being included in relation to the auditor's report. So the first thing we have included is about the materiality, then about the pervasiveness, then we have shown our opinion, and finally we have also shown the basis of opinion. This is what we included here. Is it clear, guys? Is it clear? All right. So these are the parts that are relating to the question matters to be considered further actions. So when you get a question on matters to be considered further action, first of all, you try to include the materiality, then talk about the accounting treatment, risk, and impact on financial statements. Then when you write about the further action, you should discuss about the things that you are going to discuss with the management. Then with those charged with governance, if the management is unwilling to correct the mistakes, then you will be mentioning about the impact that will be created over the auditor's report. Then you need to obtain written representation from the management. And finally, you must reflect it over the auditor's report as well. And when it comes to the reporting first of all, you need to talk about the materiality. Then you need to talk whether the mistake is pervasive or not. Then about the opinion, and finally about the basis of opinion as well. So these are the things that you need to include in relation to the matters to be considered and further action part. See, in the same manner, as I've mentioned, you will be having other requirements as well. So now we were discussing about matters and further actions. Sometimes the requirement might be a very slight different. You will be getting a question on matters and further procedures. Matters and further action and further procedure. The term that you need to emphasize here is the first one, actions, second one, procedure. So matters to be considered and further action will be the same thing what you have done above. And if you're getting a question on matters to be considered and further procedure, then you will be including audit procedures as your answer, which means that in this case, you need to write the procedures in relation to revenue. So if the requirement was like this, what are the matters to be considered and what are the further actions that need to be taken by the auditor? And if the B part of the question was to show the impact of the auditor's report, then the only way in which the answer differs is a part that, first of all, you will be including matters part in the same way in which you included in this question. But instead of writing this part, which means a further action part, you need to clearly provide audit procedures. And finally, the reporting part will also remain the same. So this is how the matters to be considered. Further procedures questions will appear. Okay. So you can just do one thing. You will be able to practice this question here. So, well, you have actually got a question on matters to be considered further procedures. There's a question called Therman in your revision kit. Therman. I will be sharing this file right after the session, or you will be able to download it from the Eximus website. So this file shows the important questions for the ACCA AAA paper, and you will be able to see a question in your revision kit called Therman. Please practice that question. The only thing that differs here is that instead of writing further action, you need to write about the audit procedures if you're getting a question on further procedures. Is it clear, guys? Okay. All right. Then, next one. Let's move on to another area. It's matters to be considered. Same. Matters and discuss with management. Matters and discuss with management. So let's find a question for that. Matters and discuss with management. Yeah, it's a basking company. It's a question on basking company. Yeah, look at the requirement here. Here the requirements ask for explain the matters which should be discussed with the management in relation to each of the uncorrected misstatements, assuming that the management does not adjust the misstatements identified, evaluate the effect of each on auditor's opinion. This is the requirement that you've received here. So in such case, instead of asking about the further action, specifically they are asking you about the matters that you need to discuss with the management. In this case, the answering pattern is very simple. Say, this was the matters to be considered and further action part. But when you're getting a question on matters to be considered and discussion with the management, the only part that you need to include is the same matters part plus discussion with management. You don't want to talk anything with regarding the discussion with those sides with governance or obtaining written representation or reflecting it in the auditor's report or anything like that, because all those areas comes under matters to be considered and further actions part. But when you're getting a question on matters to be considered discussion with the management, you only need to include the things with regard to what you have to discuss with management. So here you will be discussing certain things with the management. The same way, we will be asking the management to correct the mistakes. But before asking to correct the mistakes, you can ask about some of the assumptions. Here you can discuss with the management about the reasons that make them believe that they have already completed the performance obligation, and consider whether it is reasonable. And if it is not reasonable, the auditor should discuss with the management in order to adjust the misstatement by removing the amount of 17 million from revenue and including the same amount as part of the deferred income. That is what you have to discuss with the management. So rest everything remains the same. The only thing that matters is a part that when you're writing further action, you will be including certain points, out of which when you're getting a question on matters to be considered discussion with the management, you only need to mention about all those things that you have to discuss with the management. That's the only difference that's there in this question. Is it clear, guys? Is it clear?
Yes.
Okay, fine. So this is how you will be getting the question on matters to be considered discussion with the management. See, we actually forward to discuss about the marking scheme of the matters to be considered further actions part. So this is how the marking scheme will be like. So basically, you will be getting 1.5 mark each for each well explained points, and 1 mark each for the materiality calculation also. So you will be getting 1 mark for the materiality calculation. You'll be getting 1 mark for the discussion of the accounting standard and about the revenue recognition standards as well. Then you will be getting 1 mark for the risk and misstatement. So in total, you will be getting roughly around 3 to 4 marks for the matters part. In addition to which, the further action part, you will also be getting 1 marks for the further action part as well. And in the reporting part, in total, you will be getting 5 marks if you have talked about the materiality, about the pervasiveness, about the opinion, as well as about the basis of opinion. Each of these points will count 1 mark, and by writing the total answer, you'll be getting 5 marks in total. So this is how the marking scheme of the matters to be considered. Further actions part will be like, and the further procedure part also, the marking will be the same. So matters part will be getting 4 marks, maximum of 4 marks, and for each further action, for each further procedures, you will be getting 1 mark each. So this is how the mark will appear for the area of other further actions and further procedures as well. And when it comes to the area of discussion with the management, same 4 marks will be provided for the matters part, and basically up to 2 marks will be provided for the discussion with the management part. So this is how we'll be getting marks for the matters to be considered and further action, further procedure, and discussion with management. Okay. Just a moment. See, the another most important area from this same specific area will be the matters to be considered and audit evidence, which is a very frequently tested area in your AAA paper, matters and audit evidence. The matters and audit evidence is a very crucial area. Again, here, you'll be getting questions in a very different manner. Let's do one thing. Let's take a question called Cooper. Okay, and see the requirement here. Comment on the matters to be considered and explain the audit evidence you should expect to find during your review of audit working papers in respect of each of the issues described above. So, well, there are some set of issues that are described above, and you need to first of all comment on the matters to be considered there. So again, the matters to be considered part will remain the same. You will be answering it in the same format. First of all, you will be talking about the materiality of the issue. Then you will be mentioning about the accounting treatment of the issue. Then you need to talk about the risk. And finally, you must also talk about the impact on the financial statements. So the matters to be considered part will remain the exactly same. However, when it comes to the audit evidence part, it will be different. So basically, when it comes to the audit evidence part, here you are not requested to perform any set of procedures. Instead, the examiner is asking you about audit evidence which you can find in the working papers. So you have to assume like this: somebody have already collected some set of evidences by performing audit procedures. So the only thing that you to explain is the evidences that you can find there. So always keep this assumption. So somebody have already done the audit work and they have also collected a set of documents here. So what will be the set of documents? That is what you need to explain here. So first of all, you need to write the matters part at the same way in which we done in the past 3 requirements. And in addition to that, next you need to talk about the audit evidence. And when you're talking about the audit evidence, first of all, you need to provide the name of document or the information you have obtained. Plus, you must also show the purpose for which you have obtained that particular information. So this is how you need to write in relation to audit evidence. So first of all, you need to give the name of the document or the information. Plus, you need to talk about the purpose for which you have obtained that particular information. So please do one thing. I will suggest you with some set of common points which you can use in every scenario during the course of your exam. So that you will be able to find the audit evidence part very easily. Okay. So please note down these points that I'm going to mention now. Okay. So give a heading called audit evidence, common audit evidences. Common audit evidences. Common audit evidence. The first one. A copy of dash to ensure or to confirm dash. to ensure or to confirm dash. Second one, notes of discussion with the management. Notes of discussion with the management. Notes of discussion with the management regarding dash. Regarding dash. Notes of discussion with the management regarding dash to ensure dash. Notes of discussion with the management regarding dash to ensure dash. Next one. A confirmation from dash, a confirmation from dash in order to ensure dash. In order to ensure dash. A confirmation from dash in order to ensure dash. Next one. A written representation from the management. A written representation from the management stating that, a written representation from the management stating that, or to confirm dash, stating dash or to confirm dash. Next one. A review of notes to financial statements. A review of notes to financial statements. A review of notes to financial statements to confirm. A review of notes to financial statements to confirm that sufficient disclosure has been made, that sufficient disclosure has been made to comply with the requirements of, sufficient disclosures has been made to comply with the requirements of dash. To comply with the requirements of dash. Next one. A copy of any contract, a copy of any contract or other documents and a review of its terms and conditions, to ensure dash, and review of its terms and conditions to ensure dash. Next one. A confirmation that expenses in relation to dash, has been recognized in the statement of P&L for the period. Has been recognized in the statement of P&L for the period. Has been recognized in the statement of P&L for the period. Then next one, a review of board minutes, to confirm dash. A review of board minutes to confirm dash. The next one, an agreement of sample of dash bracket in expenses. An agreement of sample of dash. Please give a expenses in brackets in the dash part to the supporting documents, to the supporting documentation, to the supporting documentation. To the supporting documentation. Next one, a copy of loan agreement. A copy of loan agreement. A copy of loan agreement confirming the amount borrowed. Confirming the amount borrowed. The date of cash receipts. The date of cash receipts. The interest rate, the date of cash receipts, comma, the interest rate, and whether the loan is secured on any assets, and whether the loan is secured on any assets, and whether the loan is secured on any assets. Done. So these all are the audit evidences. So if you just go through that points, you will be able to understand the difference between the audit procedures that we learned yesterday and the audit evidence we learn now. So the main difference is that the audit procedures are the things that we are going to perform. So that is a kind of future thing. So we are going to perform something. So we are going to calculate something. And please include one more point there. So you will be able to understand another point as well. Please include this also. Recalculation schedule of dash. Recalculation schedule of dash to ensure the mathematical accuracy. To ensure the mathematical accuracy. Recalculation schedule of dash in order to ensure the mathematical accuracy. All right. So yesterday we learned about the same thing. We learned that while understanding about the audit procedures, we learned that recalculate the bank reconciliation statement in order to ensure the mathematical accuracy. So we are going to perform something. But here the examiner has requested us to provide the audit evidence that we can find in the working papers. So it's a past thing. So what do you need to do? The auditor might have already calculated something with regarding the bank reconciliation. So once you have calculated that, definitely there will be a recalculation schedule, right? So we can just do one thing. We can find the same thing in the audit evidence. There will be a recalculation schedule of the bank reconciliation statement. For what purpose? To ensure the mathematical accuracy. Then, yesterday we learned that we need to review the board minutes in order to understand something. So what's the difference here? Here also we can find a board minutes. And what we can see in the audit evidence, it's a review of board minutes. A review of board minutes I've already done. For what purpose? For some other purpose which is being stated in the question. Say for example, another thing, a confirmation from the management, confirmation from the third party about dash, about what it is mentioned in the question, to confirm what it is mentioned in the question. Say for example, if it was discussing about a provision in relation to the bad and doubtful, not about the bad and doubtful debts, maybe, yeah, in relation to a litigation claim, then what will be the audit evidence that we can find in the working paper? Yeah, there will be an external confirmation. There will be an external confirmation from the lawyer for what, in order to understand about the probable future cash outflow of the company. Then next, a written representation from the management. Basically, we used to mention that obtain written representation from the management to confirm dash. Here we are not going to obtain something because it's already being obtained by some other auditor. And what we can find in the audit evidence, it's nothing but we will be able to find a written representation about dash. For what purpose? for dash purpose. So again, give something that is being included in the question. So this is how you'll be giving the audit evidence. So its answering star pattern is very simple. So same is the way in which you need to provide the areas of matters to be considered. Here also the matters to be considered part will remain the same. You will be providing the materiality, accounting treatment, what will go wrong and impact. And finally, when it comes to the further action, basically you used to talk about the discussion in the management part, those charged with governance. Then if they are unwilling, then we will be discussing about the impact that will be creating over the auditor's report. If still they prevails to uncorrect the misstatement, then we will be asking them to provide us with the written representation. And finally, we will be reflecting the issue within the auditor's report. When it comes to matters to be considered, discussion with the management part, we are not required to talk anything further. And we only want to talk up to the area where we will discuss with the management. Then when you're getting a scenario on matters to be considered further procedures, instead of writing anything from the further actions part, we will be giving directly the matters to be considered part. And after that, you will be providing audit procedures. Then when you're getting a question on matters to be considered and the audit evidence part, then again, the matters to be considered part will remain the same. And instead of writing the audit procedures, you please write about the points that you can find within the working papers, which are the evidences that they have already collected in relation to the matters. So this is how you'll be giving up the answers for the area of matters to be considered and audit evidence. Is it clear, guys? Is it clear? Okay. So please do one thing. Please practice this set of questions. So I will be, as I've already mentioned, I will be giving you this file. So please go through these files to get a more insight. Since the revision classes are running in short span of time, we will not be doing much questions from this area for the time being. But we have already practiced many set of questions from this area. So you can refer to the earlier lectures if you want to know more about the area. Okay. So we have already discussed the further action part, matters to be considered discussion with the management part, matters to be considered audit evidence part, matters to be considered further actions, further procedures part as well. And now when it comes to the remaining part, we have got matters to be considered before accepting an engagement and matters to be considered before accepting the terms of an engagement. So let's look at the matters to be considered before accepting an engagement. So for which we will take a question called Dragon. So this is a question called Dragon. So here you have received a requirement. Using the specific information provided, evaluate the matters that you should consider before accepting the audit engagement in the event of your firm being successful in the tender. So they are requesting you to consider the matters that you need to consider before accepting the engagement. This is matters to be considered before accepting an engagement. And we have already learned about the matters part. Well, we will be using ACCA AAA notes by Alan for this part. And you can also find the same file in the Eximus website. So please take the matters to be considered before accepting engagement. Yeah, over here. These are the factors you will be considering before accepting an engagement. First of all, you need to consider whether you have got adequate amount of resources, say in terms of adequate amount of number of employees within your audit team, whether you have got adequate amount of time for completing the audit field work and so on. Next, you need to consider whether the acceptable level of risk, whether you are ready to accept the client's level of risk. Then you need to consider whether the audit fee is acceptable. Then you need to consider whether you have got adequate knowledge about the industry in which the client is involved in its business, about the industry's knowledge, as well as about the client's accounting policies, transactions. And if you've got in-depth knowledge about all these details, then only you should consider accepting the engagement. Then next, you should consider whether there is any factors that may affect the client's reputation. Because if the client's reputation is affected, then automatically the audit firm's reputation might also go wrong. So you need to consider whether the reputation of the client is affected. Then next, you need to consider about the preconditions for the audit. You need to consider whether the management is having adequate amount of internal controls. Then you need to consider whether you will be having unrestricted access to all the, it's listed here, whether you have got unrestricted access to all the relevant information and explanation, unrestricted access to persons within the entity, whether you will be having unrestricted access to the additional information that you require from the company, then only you should accept the engagement. In addition to which, above all, you should consider whether the company has prepared the financial statements in accordance with applicable financial reporting framework. So these are the preconditions for an audit. Next, you should to obtain professional clearance. It is nothing but communication with the prior year auditor. You should consider communicating to prior year auditor, and you should accept the engagement only if it is provided. Then, whether there is any independence and objectivity, which means it's nothing but the ethical part. You need to consider whether there is any ethical issues that will arise in in accepting this engagement. Say, for example, we might have already provided a service to the client company, and now they have requested us to provide the audit services. So we need to consider whether there is any ethical threat. Yeah, there can be chances of having self-review threat. We need to consider whether there is any possibilities of having such threats, and we should not accept the engagement if such a threat exists. Then we need to consider about the management's integrity. We should accept only if the management is having adequate integrity, or else the chances of having fraud and intentional misstatements in the financial statement would be higher. And we need to consider the factors of having money laundering, because in case if there is money laundering, there is always a possibility of having a tipping off. And to avoid the factors of having tipping off, we need to consider whether there is any impact over money laundering. So these are the factors we need to consider before accepting an engagement. Okay. However, when you get a question like this, when you get a question on money laundering, when you get a question on matters to be considered, you should not directly provide rote knowledge. Instead of that, you should write the points in relation to scenario. So while going through the scenario, you need to consider whether there is any factors that affect our resources. Then whether there is any point in the question that mentions about the factors that affects the audit fee. Whether there is any point in the question that refers about the professional competence. Whether there is anything that refers about the reputation of the client. Whether there is anything that affects the client's independence and objectivity. And you should accept the engagement only if these factors are proper. So you should be cross-checking this set of benchmarks with that of the scenarios that are provided in your exam, and should not give up the points directly. Okay. And these points should be considered only when you are accepting an audit engagement. However, if you are planning to accept a prospective financial statements engagement, such as if you are going to audit a particular company's budget or forecast. So these budgets and forecasts are known as prospective financial informations. Budget and forecast. So when you're going to audit a budget and forecast, these are the factors you need to consider before accepting the engagement. So first of all, you need to consider about the intended use of the information. Then you need to consider whether the information is for general distribution or limited distribution. Then you need to consider about the nature of assumptions that will be used in this particular situation. Then the elements to be included in the information and the period covered by the information. And only after considering these factors, you should accept the engagement. But always keep this one in mind. While getting a question on prospective financial information, you should consider both the PFI's format, plus you must also consider the common points, which means that before accepting a PFI engagement, you should consider these factors. This will be same in every scenario, because these are the factors that you need to consider as per International Standards on Assurance Engagement 3400. So this will remain same in all cases. So this is a direct theoretical area. You can write this point directly and you will receive marks for that. However, you must also consider these common points also when you are accepting a particular PFI engagement. So these common points must be considered, in addition to which, in case of PFI engagements, the other direct theoretical points must also be considered. However, whenever you are getting a question on matters to be considered before accepting audit engagement, you only need to consider these points. Okay, so this is all about matters to be considered audit, matters to be considered before accepting an audit engagement, or matters to be considered before accepting a engagement for PFI, or the prospective financial information. Well, the prospective financial information term will not be given in your exam. It will be mentioned as budget or forecast. So when you're getting a question for budget and forecast, consider that it's a PFI engagements question. Okay, then next year we're moving on to the engagement letter. So consider like this. So well, we have already discussed about a point on matters to be considered before accepting an engagement. So there should also be another scenario. And in that case, you will be getting another requirement, and they will be asking you to provide matters to be considered before accepting the terms of engagement. Matters to be considered before accepting an engagement and matters to be considered before accepting terms of an engagement is entirely different. Because before accepting an engagement, you will be considering about certain factors like the audit fees, about the risk, about the ethical threats, and further issues. However, when you are considering about the matters before accepting terms of engagement, well, the terms of engagement will be written within the engagement letter, right? All the terms of the engagement will be written within the engagement letter. So what all are the factors you need to consider before accepting the terms of an engagement? Well, you need to consider the factors in the engagement letter. So these are the factors that you need to consider before accepting terms of an engagement. So when we have studied about the engagement letter, so what do I mean by engagement letter? It's a letter between the auditor and the client company. Well, the engagement letter can be called as a contract letter that states the terms and conditions of the audit. So this engagement letter will be signed by both parties, which includes the auditor and the audit client. And the engagement letter will be mentioning about basically about these all factors. So the engagement letter will be mentioning about the objective and scope of audit. It will be mentioning about the responsibilities of the auditor, then about the responsibilities of the management. Then we will be mentioning about applicable financial reporting framework. Then again, we will be mentioning about the expected form and content of the report. So the form and content of the auditor's report. So these are the factors we need to consider before agreeing the terms of an audit engagement. Well, this engagement letters format is basically for the audit engagement. So before accepting the terms of an audit engagement, you will be considering objectives and scope of the audit engagement and responsibilities of the auditor, responsibilities of the management, applicable financial reporting framework, expected form and content of the report. So this is what you need to give when you are getting a question on matters to be considered before agreeing the terms of an audit engagement. However, you will also be getting a question for matters to be considered before accepting the terms of a PFI engagement. So when you're getting a question on matters to be considered before accepting the terms of a PFI engagement, the matters should be included within the engagement letter. So which means the same factors plus matters to be considered before accepting PFI engagements. Matters to be considered before accepting PFI engagements. So once again, let me tell you, when it comes to the matters to be considered before accepting an engagement, it will be matters part plus nothing but engagement letter part. However, when you're getting a question specifically on PFI engagements, it will be matters to be considered before accepting a PFI engagement, the terms which we learned earlier, plus the content of the engagement letter. This will be included as part. So that's only difference. So always keep this one in mind. When you're getting a question on matters to be considered before accepting an engagement, it is nothing but audit fees and stuff. But matters to be considered before agreeing the terms of an engagement will be the terms that are specified in the engagement letter. But specifically, when you are getting a question for PFI engagement, about the matters to be considered before accepting the terms of a PFI engagement, include the matters that are included in the engagement letter, plus the matters to be considered before accepting a PFI engagement. So these are the factors you need to consider in total. Okay. So once again, I'm telling you, to get a more insight about this area, please practice these questions that I have mentioned so that you will get an overall idea about this. And I hope the students who have already attended the classes have practiced through the sessions. So there's no issues with that. So please consider practicing this set of questions. Okay. Next one. Definitely we will be having a question on tendering. We will be getting a question on tendering. Well, we might have learned about tendering before. Just a moment. Yeah, tendering. So what do you mean by tender? So tender is basically a document which is being submitted by the auditor to the client company to get an audit engagement. So we will be getting a question like this actually. Recommend and describe about the principal matters to be included in your firm's tender document to provide the audit service to Dragon Company. To provide the audit services to Dragon Company, what we need to do? We need to submit a tender document to the Dragon Company. And what all are the things that need to be included within the tender document? That will be the question that you're getting in your exam. So what all are the things that you need to include within the tender document? Basically, you need to mention about the audit fees. Then you need to give an outline about the audit firms and its personnel. Then you need to give a nature, purpose, and legal requirements of the audit. Then you need to talk about the requirements of the client. Then you need to mention about the way in which you are going to satisfy these requirements. Then you need to state your assumption on the date of which you are planning to complete the engagement. You need to give a proposed audit approach or the audit methodology. You need to state about the quality control procedures, and you must also mention about the ability to provide other services. So these are the content of the proposal, and this is what you need to include as part of the answer. But instead of directly including these points, you need to explain these points on the basis of scenario. So in the scenario, they might have mentioned something with regarding to the fee. They might be stating that the audit fee, they would like to set it on the basis of a percentage basis. They will be providing you 5% of the revenue. And in that situation, you need to state that in the audit proposal, it should be mentioned by the auditor that the audit fees cannot be percentage or contingent basis. It should be a fixed fee, or a fee should be calculated on the basis of the the hours that are being spent by the auditor within the engagement. And you need to give the outline of the firm and its personnel. Basically, the outline of the firm and personnel will be provided within the scenario itself. So you can just directly copy paste that, and you can incorporate that in your own terms. Then you will be writing something relating to the assumptions made. Basically, in the question itself, they might be mentioning like this: the auditor, the client company is expected that the audit would be completed within the span of 1 month. So that you must state that it is not going to work because the audit will take substantially more period of time. Therefore, the audit firm will be able to complete the engagement within 3 months' time. You need to provide that additional points as well. So basic content of the proposal will be the same points, but you need to elaborate these points. So this will be the question about tendering. And basically the questions, you have got 3 questions in your revision kit: Janssen Company, Western Company, and Dragon Company. And you must go through these questions to get more idea about the tendering part. Okay, so always keep this one in mind. The tendering is nothing but it's very simple. So these are the matters you need to consider while including in a tender document. Okay. Again, I'm repeating the same thing. If anyone needs to watch the videos again, please watch the videos more time to get more insight about the tendering part. I mean the prior videos. Next one will be a question on the audit fees. So, which was the question? Yeah, Western. There's a question called Western in your kit. And in the Western company's question, you have got a direct question here. The first question is again repetitive. Explain the specific matters to be included within the audit proposal. See, it's a very important question which comes in repetitive nature. So please practice this question, and please do revise the notes and the prior videos. And after that, please practice this question. Right after that, you're getting a question on the audit fee. Assuming that the Western company is appointed to provide audit services to Jones Company, discuss the issues to be considered by the audit firm in determining a fee for the audit, including any ethical matters raised. So this is the requirement that you have received here. So they are asking you to consider about the audit fees that is being calculated here. Well, they might be asking about some of the ethical threats. And in addition to which, they are also asking you to consider the way in which you are going to determine the audit fees. So how do we need to determine the audit fees? Well, we have learned a lot of theory in relation to that. The audit fee, right? Audit fee. Yeah, over here. We have studied about the audit fees. So we have learned the fact that a member is allowed to charge any fair and reasonable fees. However, the fees that you're going to charge must be able to cover all the expenses that will be incurring during the course of your audit. So that is what you need to consider while determining the audit fees. And in addition to which, we have learned that we can calculate the audit fees in 3 methods. First thing, you can calculate the fees on the basis of the work that you have undertaken. So that we will learn further here. Then next, you will be able to charge the fees that you have already agreed with the client. Say, for example, if I have already agreed to A, that I will be providing the audit services at a cost of 30,000, then they are already ready to accept that, and I am also quoted the fees earlier, so I will be charging the same fees. And basically, we also know that in some custom areas, such as in schools and colleges, when we went for audit, and we will be charging same fees throughout the industry. And in such cases, custom fees will also be charged. Well, we will not be considering this second two parts. We will be considering the first point further. The fee must be considered which is appropriate for the work undertaken. So for the work undertaken, we will be charging the fees like this. First of all, you need to consider the seniority of the person who are engaged on the audit work. You need to consider about the time spent by each person, the degree of risk and the responsibilities that the work entails. Urgency of the work to the client must be considered. Importance of work to the client must be considered. Over expenses must also be considered. And these are the factors you need to consider while determining the audit fees. So basically, in addition to this, we have also learned that an auditor can charge anything that is fair and reasonable. Even he is also allowed to quote a very low fee. There is no issues with that, and it won't lead to lowballing. And lowballing will be considered only when an auditor reduces the audit fee and reduces the quality of the audit in proportion to that. So if the auditor is keeping up the standard of the audit work, and if he is reducing audit fees, then there is no issues with it. And that is what it's mentioned here. A firm can quote any fees that is reasonable, but he must always ensure that the quality of the audit is properly maintained. So these are the factors you need to consider before determining the audit fees. Again, we have spent around a whole day for learning this. So please do revise this area. It comes in page number 90. And after this, please practice a question called Western as well. Okay. So that's the area of audit fee. And in addition to that, there is also a question on advertisement. So basically, when it comes to the areas of advertisement, we have learned some set of rules in relation to advertisement. The first rule was the fact that an auditor will be able to advertise his services to any persons or to any organizations. There is no issues with that. But your advertisement should not adversely affect on ACCA or the members or the accounting profession as a whole. And we have also learned that the aim of our advertisement must be to inform others about the services and not to impress others. Then we have also learned some restriction in using the practice name. Well, we learned that an ACCA member can call himself as Association of Chartered Certified Accountants member, or ACCA, or Chartered Certified Accountant, or Certified Accountant. He's allowed to call any of this name, and he is allowed to show this ACCA as his designation along with his name. However, a company or any other organization is not allowed to use the term ACCA along with its name. Say, for example, Paybench Company ACCA or Paybench ACCA should not be used together. Because if I, Alan, is an ACCA member, then I'm allowed to use the term ACCA along with my name. But other than that, we are not allowed to use ACCA with the name of any other company. Then, in case if it's an audit firm is allowed to use the term a firm of chartered certified accountants or a firm of certified accountants. This is allowed by the ACCA. However, a firm of certified accountants or a firm of chartered certified accountants should be used only if it meets two criteria. The first criteria is that at least half of the partners should be ACCA members. At least half of the partners of the firm should be ACCA members. In addition to that, out of the half partners, they must be having more than 51% of the voting right. And only if these two criteria are met, then only they can show a firm of chartered certified accountants or a firm of accountants or ACCA practice along with this name. So half of the partners are ACCA members, and at least half of the partners must be having more than 51% of the voting right. Then, next one. The members are also allowed to give the members of Association of Chartered Certified Accountants along with a firm name. Say, for example, if the firm's name is Paybench, they are allowed to use Paybench members of Association of Chartered Certified Accountants. But this should be used only if we are having more than 100%, which means that exactly 100% of the members should be ACCA members. And only if 100% of members are ACCA members, they are allowed to use members of Association of Chartered Certified Accountants. Okay. And if you have got a firm where there is a mix of both, a mix of multiple professional bodies, then we are not allowed to use certified accountants and chartered accountants. Instead of which, we will be allowed to use only the name of the professional bodies. Say, for example, the partners of this firm are members of either ACCA or ICAEW. That is what we are allowed to use. Well, these all are the criteria about which, again, we have spent around, I guess, 1 or 2 days during the lecturing sessions. So please do revise this area and please practice the question of Zanzio. Okay, so there's a question again called Zanzio. Please practice the question of Zanzio to learn about the way in which the questions are tested in the advertisement part. Yeah, so this is a question on Zanzio. As you can see over here, the questions will be providing you a fair advertisement, and you need to criticize this advertisement and need to consider all the ethical and professional issues involved here. Say, for example, RN Company, it's a name of a firm. It's a chartered certified accountants. They have mentioned chartered certified accountants along with its name. So as you can see over here, they have mentioned the accountant, the company has got, or the firm has got 12 officers and 30 partners, 10 of whom are ACCA members. Are they allowed to use the term chartered certified accountants? No, they're not allowed, because at least half of the partners should be ACCA members, and only if they are having adequate amount of voting right, that's more than 51% of the voter right, then they would be allowed to use the term chartered certified accountants. And in this case, they haven't met the criteria, so they are not allowed to use the term ACCA along with this name. So this is how we will be getting questions on advertisement. So please do practice the areas from advertisements also. Next one, it's a question on quality control. So basically, when it comes to the area of quality control, it's a very simple area, and definitely you will be able to score a very good mark from this area as well. So we will do a question called retrieval. Yeah, we have got a question here from retrieval. And the question asks you about, in relation to the audit of retrieval group, evaluate the quality control, ethical and professional matters arising in respect of the planning, performance of the group audit. And it's requested here that you need to evaluate the quality control issues here, ethical and professional issues here, while planning and performing an audit. So how can we consider whether there is anything that affects a firm's quality control, or whether there is adequate quality in the audit? How can you ensure that? Let's look at it. Quality control. Yeah. So we have learned certain provisions in relation to the ISQC1 quality control. In addition to which, we have also learned about quality controls checklist. So these are the checklists in relation to quality control. So what does the checklist actually mean? So these are the things that you need to ask to the scenario. So you have got a very detailed scenario here, and the scenario have given you some details with regarding the audit firm and the way in which they have done the audit procedures also. So how can you ensure whether there is adequate quality here? First of all, you need to check whether the firm have followed proper quality control procedures. So look at whether the firm is following ISAs, International Standards in Auditing. Say, for example, we have learned in ISA 500 that an auditor need to obtain sufficient appropriate audit evidence in relation to inventory. And it's actually being learned in ISA 501, additional consideration for the selected items. However, an auditor is stating that it is not required to find evidence in relation to inventory because in M material. Well, we have learned that it's mandatory for an auditor to obtain sufficient appropriate audit evidence in relation to the inventory. Next, we have learned in ISA 320 that an auditor need to revise the materiality whenever it's necessary, and for which an auditor need to review the materiality throughout the audit. And it's mentioned in the question that an auditor has determined the materiality at the starting stage of audit, and this tends to be used throughout the audit. So is that correct? No, it's not, because it's clearly mentioned in the standards that an auditor should use the materiality at the initial planning stage, and thereafter the auditor should consider reviewing that. Whenever necessary, the auditor should also revise that. So hence it's proved that the standards are not followed. So this is the first thing that you need to consider. You need to consider whether the ISAs has been followed properly. Then next one, has the work been allocated to appropriate level of staff? You need to check whether the work are being carried out by proper staff members. So say, for example, the most judgmental areas such as the areas of going concern are provided to the audit juniors to perform work on. So it will not be a correct treatment, right? Because the audit juniors might not be experienced to check the very sophisticated accounting area. That's a going concern area which consists of a lot of assumptions. So if that is being segregated to the lower level staff team within the audit firm, then the work is not provided to appropriate level of staff. So it reduces the quality. So you can mention about that. Then you need to check whether the audit is time pressured. It may be mentioned in the question whether the audit is time pressured or not. If the audit is time pressured, then definitely the auditor will not be able to obtain sufficient appropriate audit evidence. Hence, it again reduces the quality of audit. So we can state that again it affects the audit. So we need to check whether the audit is time pressured or not. Next, we need to consider about appropriate type of evidence being obtained. So we need to consider the type of evidence being obtained. So let's check whether the evidence obtained by the auditor is adequate or not. So while considering the adequacy of the evidence, you need to consider certain factors. You need to consider whether the evidence obtained by the auditor is written or oral. Then whether it is directly obtained by the auditor or provided by the client. Then whether it's an external evidence or whether it's an internal evidence. Then whether it's an original documents or a photocopy. So these are the factors that you need to consider. Because the written evidence will be always more reliable than the oral evidence. Evidence obtained by the auditor will be more reliable than the evidence provided by the client. The external evidence will be more reliable than the internal evidence. And the original documents will be more reliable than photocopies. So these are the factors you need to consider while determining whether the whether the audit firm has obtained adequate type of evidence. So if any of these evidences are obtained, then these are not adequate. If these kind of evidences are obtained, these are adequate. So basically, it tends to be the fact that this will be the kind of evidence that may be collected by the auditor that will be mentioned in your scenario. So you can check this, and if there is something, you can mention that there is quality affected. Then you must consider whether the audit has been performed in accordance with the audit plan. If the audit has been performed in accordance with the audit plan, there won't be any issues in some cases. But it may be mentioned that in the initial stage, the auditor was decided to perform a control-based audit, but later on they discovered there are certain deficiencies in the internal control system, but still they move on with the engagement. It might be mentioned like that. But in that case, what we'll do, we will mention that in such a situation, what will happen, it may be mentioned that it will lead to mistakes because we won't be able to find out the mistakes exist in the financial statements by checking through a control approach when the internal control systems are weak. Okay. And very finally, we must also consider whether the audit is properly supervised and reviewed. And in case if the audit is not properly supervised and reviewed, then the quality of the audit will be degraded. So we need to consider whether the audit is properly supervised and reviewed. So these are the factors we need to consider before considering whether the quality of an engagement is affected or not. So what will be the factors to consider the quality control? First of all, we need to check whether the ISS are followed, whether the work is being provided to appropriate level of staff members, whether the audit is time pressured, whether adequate types of evidences are obtained, whether the audit is performed in accordance with the audit plan, and whether it is properly supervised and reviewed. So these are the factors we need to consider. So once after going through this point, please do the question of retriever group or Mako and company. Well, we have already practiced both of these questions, but still one more time, please go through that. Okay. The next one will be the area of PFI's examination procedures. PFI's examination procedures. Please do one thing. In case if there is someone who haven't received a notes for this PFI examination procedures, please do take a screenshot of this. Please take a screenshot of this. The examination procedures for the PFI. Okay, then again of this one as well. So well, I have provided here some of the sample points for performing the procedures on PFI. So consider like this, basically the PFI's question. There are many questions for PFI in the exam. Janssen company, then I will take a question for Hope company for better understanding. Yeah, question number 37, hope. See, here we have received a requirement. Recommend the procedures that should be performed in order to examine and report on forecast financial statements of Hope Company for the year ended 30th May 2013. So, you need to write procedures in relation to the Hope Company's PFI. So, what do you need to do actually here? So, you have received a P&L here. You have received a statement of cash flow, statement of financial position here. And you need to write points in relation to the PFI. So, well, these are forecasted financial information. So, you won't be able to directly obtain some kind of audit evidence here. Same as that in the way in which you used to do the audit engagement, you won't be able to find any such evidence. Because the audit, in an audit of financial statements, basically we will be looking at historical documents. Therefore, we'll be having adequate amount of evidence. But when it comes to a PFI engagement, well, these are just based on future forecasts. So we won't be able to find adequate evidence. Therefore, the examiner suggests that the only thing that you need to do is to have certain discussion with the management. And in addition to which, you can also perform some sort of analytical procedures. You can compare the current year balances with the prior year. In addition to which, you can also request written representations from the management. You will be able to obtain external confirmation if they are stating about some plans that the bank or any other person is going to provide to them. Or in such cases, you will be able to ask such points. So basically, the only thing that you need to mention or emphasize more over here is the general points, some set of general points. In addition to that, you must also focus on some of the analytical procedures points as well. Please look at here. General procedures. Recalculate the forecast financial statements to confirm mathematical accuracy. So you can use that point in all cases. You will be able to recalculate the forecast financial statements to confirm the mathematical accuracy. Same as that, you can consider whether the accounting policies that are being used for the preparation of the forecast financial statements are in conformation with IFRS standards. Then you will be able to consider whether the accuracy of the forecast prepared in the prior year that can be compared with the actual results of the prior year itself. Then you can perform analytical procedures. You can perform a reasonability study. And all these are the general points. And when it comes to the points specifically to the P&L, consider like this. Analytical review should be followed by the discussion with the management on the trend in revenue, which is forecasted to increase or decrease as compared with the prior year. So before writing that point, just look at here whether the revenue is increased or decreased. Yeah, the revenue is increased from 2,600 to 25,000. So you need to find out the percentage variation here. Suppose if the percentage variation is 20%, there's a 20% increase. So you write it according to the scenario. Analytical procedures followed by discussion with the management on trend in revenue, which tends to forecast to increase by 20% as compared with the prior year. The next one, you see what's the impact that have been created over the expenses. Well, the expenses has also increased. So just do one thing, take an addition of the expenses, the percentage increase in expense. Then again, you need to write the point here. Discuss the reason for the anticipated increase in expenses by 20% as compared with the prior year. Then you can obtain a breakdown of these expenses and you can compare the breakdown with the prior year to understand whether there is any omissions. Then there's a profit on disposal here, right? So you can recalculate the profit on disposal. There's a finance cost that's increasing. Then you can just do one thing. The company might have mentioned that they might have taken a new loan. So you can just do one thing. You can recalculate the loan amount in order to ensure that the amount of finance costs included within the expenses are reasonable. So these are the things that you have to perform. The only thing that you need to focus is the fact that, first of all, you need to understand whether you are getting a question on the prospective financial statements as a whole, or whether you are getting a question on the forecast statement of P&L or on the forecast statement of SOFP. If you're getting a question on the forecast statement of profit or loss, then please include general points plus forecast statement of P&L's points. General point plus forecast statement of P&L's point. And if you're specifically getting a question on forecast statement of financial position, then try to include the general points plus specific points that I've given in relation to forecast of financial position. And if you're getting a forecast financial statements procedure on the total set of financial statements, try to include general points, then points in relation to the SOPL and points in relation to SOFP. So you need to include a comprehensive point of all this content. So these are the factors you need to consider while providing procedures for performing PFI engagement. So PFI engagements procedures are almost similar as compared with that of the other engagements. So the only difference that makes here is the fact that you won't be having that much access to normal audit evidences as in the way in which you used to get common. But the main difference is on the point that basically there will be much difference on the evidences that you used to collect here. So here you need to focus much on discussion with the other management, then recalculations, and in addition to which you must also consider about the points of other areas, which means that you need to consider the points of analytical procedures purely based on scenario. Okay, all right. So this is how you will be getting the questions on PFI. And please do one thing, please practice the questions of Janssen Company, Hook and Waters. Then KPI engagements. So the KPI engagement, let's see that. There's a question called Condensed Sky. Please take the question number 57 of the Condensed Sky. So we have got 2 questions for Condensed Sky. And yeah, looking at here, recommend the examination procedures to be used in audit of performance information. They have given us the question that you have to recommend the examination procedures that you have to use in auditing the performance information. So what's the things that you need to consider here? See, these are the KPIs or key performance indicators. So this is a college, and therefore their key performance indicators are graduation rate, academic performance, employability, and the course satisfaction. And the related achieved results are 85% of graduation rate. The students who have appeared for the exams have cleared at 85%. 20% of their students have received distinction. Then 65% of their students who have completed the graduation received employment. And in addition to that, 70% of their students have also rated their colleges excellent or very high. So this is a key performance indicator. And our responsibility as an auditor is to find out whether these key performance indicators are actually achieved by the entity or not. And it is very easy to figure this out as well. The only thing that you need to do is the fact that you need to consider whether what all are the things that I can discuss with the management here. All right. Then what all are the things that I can recalculate here? About what things that I can compare with the industry standards or the prior year? About what I can obtain written representation from the management? What is the scope of having what is the scope of obtaining an external confirmation from someone? Is there any possibility to review any correspondence between anyone? So these are the things that you need to consider, and you will get answers for KPI. So literally it means that it is nothing but the way in which you to write the PFI, the normal audit procedures. The only difference here is the fact that instead of evaluating financial statements, here you are evaluating the key performance indicators. That's only matter that differs here, but it's very easy to understand that as well. Because say, for example, percentage of students who have completed the degree program is 85%. What you can do, you can recalculate the percentage of students who have completed the degree program by dividing the amount of students who have cleared the exams by the number of students who have appeared for the exams to ensure the mathematical accuracy. Then percentage of students who have achieved distinction. What you can do here, obtain external confirmation from a sample of students who have received distinction in order to confirm that the percentage of academic performance claimed by the management is reasonable. Then percentage of students who rated their university as experiences very good or excellent. What we can do, we can inquire with the management the way in which they have obtained feedbacks and reviews from the students and obtain a copy of the same in order to confirm the existence. So this is how you will be providing the points. So always keep this in mind. When you get a KPI scenario, consider about what all are the evidences that I can obtain here. So is there any scope for recalculation? Is there any scope of having a discussion with the management, obtaining external confirmation from anyone, obtaining written representation from someone, then any scope for recalculation, any scope of reviewing correspondence between the students and of the college or the university, and so on. So always keep this one point and try to write the points accordingly. Okay, all right. So this is all about the KPI. And in the same question itself, we have got condensed sky. The same question itself, we have got another scenario about the going concern. So which is a pretty simple scenario. See, you will be getting a question like this. Identify and explain the matters that may cast significant doubt on the company's ability to continue as going concern. So you have received a scenario here and they are asking you to identify and explain matters that may cast significant doubt on the company's ability to continue as going concern. What do you need to consider here? That's the first point that you need to look at. So you need to consider all those financial, operational, and other indicators. So whatever are the things that you feel might affect an entity's ability to continue as going concern. So say, for example, whether there is any factors that will reduce company's profitability, whether there is any factors that will affect the company's cash flow or the profit. So these are all the factors that you need to consider. Say, for example, if you look at here, in the scenario, you can find that the company's revenue has decreased significantly. Operating expenses are decreasing, but still company's profit has been converted into losses. So we can state that the company's operations are not going on well. The company's revenue is decreasing. In addition to that, the company's profits are being restated into losses, thereby resulting in an operating loss for the year. Therefore, the company's going concern need to be considered. There may be many uncertainties in relation to going concern. You can state that. Then, if you look at here, a contingent liability related to support or which condensed sky are provided to main supplier of cane sugar, which is facing difficult trading condition. So they have also provided a letter of support to another entity. What do you mean by letter of support? It's a letter which we provide to a subsidiary entity, claiming that whenever they require fund, we will provide the fund. But you can see here, already they are running out of money and already they are facing some kind of legal issues as well as they are having operating losses. And now they are claiming that they will also provide support to the subsidiary entity as well. So what will happen in this situation if they provide a support? Definitely there can be chances that when the subsidiary entity requires fund, the company won't be able to deliver that. They were resulting in reputational damages, as well as in case if the company provide fund to the subsidiary company, then the entity would face further financial difficulties in the form of cash flow difficulties. So these are the factors that you need to state there. Okay. So this will be the things that you will be providing as part of the going concern review. So always just keep this one in mind. Going concern is comparatively very simple area. Only need to figure out all those points which shows that which affects a company's operational activities or financial activity, or which factors which shows that company is facing some sort of financial difficulties. Okay, please practice condensed sky's question. Then money laundering, Lark and Company. So basically, what do you mean by money laundering? Money laundering is a very important concept for which we spend a few number of days of class. So money laundering means that a person is converting the illegitimate money into a legitimate funds. The illegitimate fund will have an appearance of legitimate fund, and this conversion is known as money laundering. And we have learned that there are basically 3 stages in the money laundering. The first stage is a placement, the second stage is layering, and the third stage is integration. When we talk about the placement stage, it's a disposal of illegitimate fund into a legitimate business activity. When we place the illegitimate fund into legitimate business activity, it may be called as a placement. Then next stage is layering. So layering means that when we convert the money from illegitimate source into legitimate source, that's something called layering. Say, for example, transfer of money from place to place or business to business can be called as a layering stage. And what is integration? Integration means that finally the money will have the appearance of legitimate fund. That is something called integration. So these are the 3 stages of money laundering. So placement means that it's a disposal of illegitimate fund into legitimate business activity. Layering means that it's a transfer of money from business to business or from place to place to conceal the original source. And integration means that the transfer of, finally the money will have the appearance of legitimate fund. That is something called integration stage. In addition to which, we have also learned about the tipping off. Tipping off is the process by which a person will, what do you mean by tipping off? Tipping off occurs when a particular person may provide information to a person who is the suspect of the money laundering that he's under a money laundering investigation. This is something called tipping off. And basically the most important thing and also need to consider in case of money laundering is the fact that there is always a possibility of having tipping off. So in order to avoid the possibilities of having tipping off, what an auditor need to do, the auditor must always try to consider reporting the money laundering issues to money laundering reporting officer or the MLRO. Please revise the theoretical areas. And we have also learned about the reporting of money laundering. So what was the reporting format of money laundering? First of all, a person will be appointed in an organization to receive the disclosures. He will be known as a money laundering reporting officer. And any person within an organization who feels that there is a suspect of money laundering, then about that suspects and all the suspicious activities must be reported to the MLRO. Once we disclose it, all the activities to the firm's MLRO, the MLRO will consider whether there is any actual possibility of having money laundering. And if the MLRO feels that there is a possibility of having money laundering, the MLRO should report that to National Crime Agency or Financial Intelligence Unit. And once that is being communicated, the MLRO will also provide a report, and report will specify about the details of the suspect, then the identifications and references of the suspect, then nature of suspicious activities will be reported. And finally, if there is any other information or evidences that need to be provided, that will also be provided as a supporting. So this is how we will be reporting everything in relation to money laundering reporting officer. And if the examiner requests you to write a deep knowledge about the reporting part of money laundering, this is the way in which we report about money laundering to money laundering reporting officer, and finally to the financial intelligence unit. I will explain it again. First of all, if it is an auditor, then the auditor should report about the money laundering to MLRO. MLRO will consider the case, and MLRO will communicate it to National Crime Agency, NCA, or Financial Intelligence Unit. And finally, the MLRO will also provide a report to Financial Intelligence Unit. This is the total reporting stages involved in money laundering. Okay. And I hope you remember the question that we have done in relation to money laundering called Lark and Company. So I'm not mentioning anything in relation to that, because Lark and Company is the only question where we can practice properly about money laundering. So please do one thing, please practice a question called Lark. Please go through that one so that you will get a more understanding about the way in which the money laundering questions will appear during the course of your exam. And as I've already mentioned, it's a one and only question where the money laundering is directly being tested in that deep. So please go through that Lark and Company's part B. So you will get a more understanding and thorough understanding about money laundering. But almost in relation to that, you have also got another question, Thompson and Company, but still give much more importance to Lark and Company because it's an area where it's deeply tested. Okay. So this is all in relation to money laundering. And finally, you have got another important area called due diligence. So basically, due diligence is a most important topic in your AAA exam. So there are many questions in relation to due diligence as well. Well, what do you mean by due diligence? So due diligence engagements are basically a kind of non-assurance engagement, and the due diligence engagements are performed in order to avoid poor investment decisions, right? Basically, the due diligence engagements are performed to avoid poor investment decision. So always keep this definition in mind. So you are performing a due diligence engagement in order to avoid poor investment decisions. So your question will be like this. Recommend the additional information which would be made available for your firm due diligence review and explain the need for the information. So the examiner is asking you about what all are the additional information that you require in relation to your firm's due diligence review and explain the need for each of the information. Well, the question is very straightforward and very simple. So the scenario starts from here about the Loki company. So consider like this. The examiner is asking you, you are going as an engagement partner while performing the due diligence review. And you will be taking here an investment decision, whether to invest in that company or not. So while taking that investment decision, well, you need to consider certain factors, right? Because you need to consider whether this investment will be worth it or not. So to understand that, what are the information that required? Simple as that. So you just want to consider from the viewpoint of an investor. So you will be considered as an investor, and you need to assume that what are the factors that I need to consider while investing in these projects? All those are the factors that you need to write it in the exam. That's the answer. Consider like this. Here, the company's financial year end is 31st August. Its accounting function is outsourced to Austin Company, a local provider of accounting and tax. So it's in the question, it's mentioned that the client whom we are going to acquire is outsourcing their some sort of work to the Austin Company, another company. So what will be the additional information that you require here? So you will be requiring the additional information in relation to outsourced work. Why do we need that? Explain that. We require that because in order to understand whether the company outsources its whole accounting and tax services or just an immaterial area. Because in case if the contract is made for a significant period of time, then it must be considered before buying this particular company. Because in case if the outsourced amount is much more than the amount that we need to spend on in-house services, then we need to consider whether this investment will be worth it or not. So then only we should consider buying this client company. So that's a factor we need to consider here. So as you can look over here, low-key companies enjoys a good reputation, though it's tarnished in the last year due to some issues, and there are some court cases going on. It is what explained here. So what's the additional information you require here? You require the additional information in relation to the company's loss of goodwill. Why? Because once you acquire the company, if the company's goodwill is not that great, then you won't be able to generate good amount of sales with this brand name. Therefore, you need to consider whether it has affected the company's operations at large. And if it affects the company's revenue and other company's assets, then we must consider not buying this client company. That is what you need to consider. Then next one. They have also mentioned that there's an ongoing court case against the company. So we need to consider about the court case. Why we need information about the court case? Because once after the acquisition is done, there can be chances of having pending litigation against the company for which we will be liable. Therefore, we need to consider whether this liability will be a very significant amount. And if this liability is a very significant amount, then the acquisition won't be worth it. So we need to consider that. So that's the thing that we need to consider while acquiring this company. So this is the way in which you need to consider while getting additional information or while recommending additional information and the purpose. So just think from the perspective of an investor. Consider that you are going to acquire the client company or the company for which you are performing a due diligence engagement. And what if this happened? And what if that happens? And therefore, you need further information. And what's the reason for the information? Well, to understand whether it may affect you in some or other ways while the acquisition is done or once the acquisition is done. So this is all you need to consider in relation to the due diligence engagement. Okay. Again, I have listed the due diligence engagements questions here, which is very important. That includes a question of cheater company and Jacob company. And very finally, the area is critical appraisal. So the critical appraisal area is being tested as part of your exam in a variety of ways. Well, before that, the first thing that you need to consider while studying the critical appraisal part, just a moment. See, in the notes, ACCA AAA by Alan, there's an area for the reporting session. Yeah, over here. The first thing that you need to ensure before practicing a reporting question or the critical appraisal question is the fact that you must have adequate amount of knowledge in reporting. You must by heart and study. This is the only thing that you need to by heart. You need to by heart and learn about the reporting format of each of the engagement. So, well, this is a specific reporting format for the assurance engagement. These are very rarely tested. This is a reporting format for an audit engagement. This is very significantly and very frequently tested. Then another important area is the reporting format of PFI. Well, this is a damn important point because the PFI's reporting format is asked as a direct question in your exam. In addition to that, the PFI's reporting procedures are also asked as part of your critical appraisal questions also. So it's very important. Other than that, there are some other reporting format as well. Within this, the most crucial ones are the reporting format of the prospective financial information area, as well as the area of the audit risk. Okay, sorry, audit report. So after learning this, please take the question of order group. There's a question of order group. Yeah, in the order group question, take the part B. See, critically appraise the proposed auditor's report of Mar and Company for the year ended 28th February 2015. That's a question. So you're going to critically appraise the auditor's report. So basically, when it comes to the auditor's report, you won't be getting a full-fledged auditor's report. You will be getting an extract of the auditor's report. So they have given you an extract of auditor's report. In addition to that, they have also given you a scenario here. So it might be mentioned about some set of mistakes in the scenario. The first thing that you need to do is to calculate the materiality of the misstatement. Then you need to consider whether the mistake is pervasive. And you need to find out the opinion that I need to express over the financial statements. Okay, so first of all, calculate the materiality on the basis of the scenario. Calculate whether that amount is pervasive or not. Finally, you must also consider the opinion that you need to provide over the auditor's report. Then after that, just come to this area and check whether the opinion included in the proposed auditor's report is correct. On the basis of this finding, you need to consider whether the auditor's opinion provided on this proposed report is correct. Next one, you need to consider the opinion and basis of opinion headings. You need to consider whether the heading of opinion and basis of opinion is correct. Well, as you can see over here, the opinion and basis of opinion headings are not segregated. So we understood the fact that the opinion and basis of opinion heading is not correct. Then next, you need to consider whether there is any possibilities of having unprofessional wordings. Okay, whether they have used any unprofessional wordings. Say, for example, here they are mentioning that they have proven conclusively. When in audit, we never used to prove something conclusively. Then, yeah, they have used the term Rita Gilmer has refused something. So we never mention anybody's name within the auditor's report. And we do not think that, well, we are concluding everything based on evidence and nothing is taken on the basis of pure judgment. So these all are unprofessional wordings. So you need to consider whether the unprofessional wordings are there or not. Next, you need to consider whether all relevant informations are provided. All relevant informations are provided. Say, for example, it may be mentioned in the question that referring to notes to financial statements, but they may not be referring the note number. Then they will be mentioning, we have audited the subsidiary, but they might not be mentioning the subsidiary's name. Then they might have mentioned the term relevant financial reporting framework, but they are not mentioning the accounting standard as such. So these are the relevant information provided, need to be considered there.
Amount of receivables is not mentioned.
Sorry?
Amount of the receivables.
Yeah, amount of receivables is also not mentioned. So which means that they have not quantified the misstatement. So the quantification of the misstatement should also be considered. Quantification of the misstatements means that the amount of misstatements need to be mentioned here. So they haven't mentioned any figures there. So the quantification of the misstatement should be considered. And in addition to that, explanatory paragraph. See, they have included an emphasis of matter paragraph here. So when you have learned the usage of emphasis of matter paragraph, we know the fact that emphasis of matter paragraph should be used to emphasize about something which is being appropriately presented and disclosed in the financial statement. So here we need to check whether the things included within the emphasis of matter paragraph are appropriately presented and disclosed. And if not, the usage of emphasis of matter paragraph is not fair, it must be removed. So these are the factors you need to consider while critically appraising the proposed auditor's report. So what all are the things that we need to consider? We need to check whether the opinion is right. Then the opinion and basis of opinions headings are provided properly. We need to consider whether there is any usage of unprofessional wording. We need to consider whether the relevant informations are provided, whether the quantifications are provided. Then explanatory paragraphs usage must also be considered. So these are the all factors that I need to consider while critically appraising the auditor's report. However, we will just move to the question of rocket company. So which was the question we did earlier. So the rocket company's questions part B is a question called Tulip Company. And well, this is a question which is for the critical appraisal of the proposed assurance report. But this assurance report is PFI. It's PFI's assurance report. So when it comes to the PFI's assurance report, what we need to consider here? We need to consider the PFI's reporting format. The PFI's reporting format, as I've already mentioned to you, it's very important to consider. And when it comes to PFI's engagement, the main difference is that the PFI's engagement, the total amount of report will be provided. Instead of giving a draft or instead of giving an extract of the report, the total PFI engagements report will be provided to you. So as you can see here, you have received a total set of financial statements, maybe PFI's financial statements, prospective financial information. And the main thing that you need to consider is to cross-check this set of requirements with that of the scenario that you have provided. You need to check whether the title and address is correct, whether the subject matter is correct, whether applicable financial reporting framework is mentioned, whether the management and accountant's responsibility is mentioned, and above all, you must also consider the general points I've mentioned earlier, which means you need to consider whether there is any unprofessional wording, whether there is any leakage of information, whether they haven't mentioned adequately about the accounting treatments, and so on. That must also be mentioned here. So these are the things that you need to consider while providing an appraisal for the proposed assurance report of PFI. And one more thing, see, the title will be common in case of PFI and audit engagement, but the addressee, in case of audit engagement, the addressee will be usually shareholders. But in case of PFI engagement, the addressee will be basically board of directors. So here they have mentioned shareholders of Tulip company. So well, it can be considered as a mistake. So basically the addressee will be board of directors. So that is what you need to consider here. Is it clear, guys? Okay. So always keep this one in mind. So when writing the points of PFI, you should not include any points as that of the audit procedures. So you will be considering here purely the reporting format of the prospective financial information, and the reporting format of the PFI should be cross-checked with the extract provided during the course of your exam. Okay, so please practice this question as well. Question called Rocket Companies Part C, Tulip Company. So I will be sharing you this set of files. I mean the advanced audit and assurance important questions. Well, I've already provided you these notes and it's there in the website. So you can download from the website anytime you want. And all other notes shown in the class are also included in the website as well. So these all are the areas that you need to consider while writing your AAA paper. And these all are the major areas in the AAA exam. Okay. So we were rushing through all the parts very quickly, but I hope you got an overall idea because all these areas were discussed in, I think it's over more than 40 days. We have discussed about all these topics. So please do revise the areas as well as you can also watch the earlier videos for any number of times. So please go through that videos as well. Okay. So I am telling this to the students who were already attending our sessions. So you can watch it any time as you want. So let's quickly once again go through the topics. So we started with the area of matters to be concerned further action. So while writing the further actions part, we will be writing about the materiality, then accounting treatment, what went wrong and impact. And plus you will be mentioning about the discussion with the management, those charged with governance. And if they are unwilling, then the implications that you are mentioning to those charged with governance about the auditor's opinion, as well as you need to obtain written representation from them and finally need to reflect it in the auditor's report. When it comes to further procedures, instead of writing further action, you need to write about the audit procedures. When it comes to the discussion with the management, the matters part will remain the same, and only the area that changes is the area of discussion that you only need to discuss with the management here. And when we are considering the matters to be considered an audit evidence, it's entirely different. You will be considering about all the audit evidence which have already been collected by some other auditors and kept in the audit file. Then these are the main areas here. Then while writing the matters to be considered before accepting the engagement, this will be common factors that you need to consider before accepting. But when it comes to PFI engagements, you need to write the specific points in relation to PFI plus general points. And when it comes to matters to be considered before accepting the terms of an engagement, it will be basically the terms of engagement letter plus the points of PFI must also be considered as per ISA 3400. Then when it comes to the critical appraisals area, the common things that we need to consider, we have already discussed. Then tendering audit fee will be purely based on the theoretical area. So please revise the theoretical area. When it comes to the quality control, always keep in mind to consider the questions or the benchmarks, such as whether the auditor has obtained adequate amount of evidence, whether the audit is time pressured, whether the evidence obtained by the auditor is reliable or not, whether the audit work is properly allocated to the different levels of staff, then whether the quality control procedures are followed, whether the audit are being performed in accordance with the audit plan, and so on and so on. You need to consider those points. Then when it comes to the KPIs and PFIs examination procedures, when it comes to KPIs procedures specifically, you need to consider about the way in which you need to write the audit procedures. PFIs examination procedures, you can use the common points that I've given you. When it comes to the going concern area, you need to consider whether there are any factors that affects the company's cash flows, revenue, or the company's going concern ability. Then the money laundering questions, you need to consider about the factors that shows whether there is any transfer of fund from one country to another, which shows the layering stage. Then whether there is any factors that shows that the company's owners or investors some sort of fund in the company, which shows the placement stage, and finally whether the money is appearing in the financial statements, which shows the layering stage, integration stage. And finally, when it comes to the ethics part, ethics is purely all around the whole syllabus. You need to consider 5 ethical threats, which includes the self-interest, self-review, advocacy, familiarity, and intimidation. And when it comes to the area of the due diligence, always think like an investor and consider about all the factors that you might consider while you are investing in some company. And you need to write about the reasons also, about the reason for which you are obtaining multiple types of information. So these all are the things that you need to consider in relation to your AAA exams. Okay. So the main thing from now on that you need to do is to practice the questions from these areas. So well, these all are the questions that are there in your overall syllabus. So once you have gone through all these questions, you can ensure that you have covered almost all part of the syllabus and you have done at least one question is from each of the cases. So it will definitely help you in your course of exam. And in addition to this, the next thing that you need to consider is to practice maximum number of questions as you can and try to practice it using your system itself. And plus, when you are doing your questions, always try to revise the areas of the SBR as well. Because once you have gone through each one of the questions that I've given you as important question, then you will get an overall idea about the way in which the questions are tested. And the question and the answering part will also be same throughout the years in your exam. But the only thing that matters as different is your treatment and of the accounting areas. So the accounting treatment will keep on varying because the scenarios will be different. The scenarios will be entirely different. So to cope up with the changing scenarios, the only way in which we can manage that will be by the way of practicing maximum amount of questions as well as revising the accounting standards. So please do revise the accounting standards also. All right. Perfect. So these all are the things that we were planning to discuss in this revision session. I hope this session was helpful. So please do practice the maximum number of questions from now on. All right. So that's it, guys. So these all are the areas for the revision session. So please do practice the maximum number of questions and all the very best for the exam. Thank you so much. Bye.
Thank you, sir.
Thank you, sir.